Hi, this is Mani from BSc to NSE.com. In this video, I'm going to specifically talk about how to use Heikin Ashi on daily chart for positional trading. You can do this either in futures or options. So before I proceed, I'm going to clarify the definitions that I normally have for myself. And the good thing with the Heikin Ashi is the patterns are very simple to read, and you can just make out just by watching very quickly, unlike candlesticks wherein there are at least 10-15 patterns like bullish engulfing, bearish engulfing, and too many things, wherein again you need to read by looking at two candlesticks together. But in Heikin Ashi, you're going to just follow the one candlestick just by the shape of the candlestick alone, because by definition Heikin Ashi takes into account the previous candle and modifies the current day's candle shape. So it brings in simplicity when it as opposed to the normal candlesticks. So there are only three patterns that you can see on Heikin Ashi chart, and the simple definition for a doji is it can be any size. Unlike the normal candlesticks, the body can be of any size. As long as you see sticks at the bottom and a stick at the top, I'll call it a doji. It's very simple, right? So it can be a positive candle or a negative candle, it does not matter. It can look like a hammer, not look like a hammer, does not matter. All you need to see is there's a stick at the top and there's a stick at the bottom. Okay, it doesn't matter how big the size of the stick is. It can be as small as the candle you see in the middle here. It's still a doji for me. Basically what we define is that the traders don't know, or the buyers and sellers are equally there and they are fighting it out. So the direction is not clear is what it means. So the stick at both the ends, it's just a doji, and it's just a confused area where buyers and sellers are still sorting it out, still trying to figure out which way markets are going to move. Okay, the flat bottom is when you don't see a stick in the bottom. And in Heikin Ashi, when there's no stick in the bottom, it has to be a positive candle, because there's no stick only when the open price is actually same as the low price or actually below the low price. Okay, so there's no flat bottom negative candle. So if it's a flat bottom, it has to be a positive candle. Okay, similarly, flat top, meaning there's no stick at the top, which means that it has to be a negative candle. It can come in varying sizes. Either the markets are went down hugely on that day or not such a big negative on that day. So the size can vary, but it's still a flat top. If it's a flat bottom, it means that on that day buyers have made a decisive move, and they're actually kicking the sellers out of the market. That's what it means. And similarly, a flat top means that the sellers have the upper hand, and they've decided and they're overpowering the buyers and they're taking the markets down. Okay, so this is a simple logic, and I'm just going to say I'm just going to show you Nifty and Bank Nifty 3-month chart and show you how accurate it is when you use it. And I'm going to also count the number of trades and give you a quick look at how accurate it can be. So this is Zerodha Pi, and this I'm going to show you for Bank Nifty and Nifty alone, and you can use this on specific stocks as well. So let's start with Bank Nifty. So I'm starting with the Bank Nifty chart. This is a futures chart. So I think you can see data from I don't know, last 3 months. Yeah, this is 6 month. So I think for the last 2 months or 3 months period this is. So what I'm going to assume is going back at the start of a trend, when there's a flat bottom, I'll go long or buy a call option, and as soon as I see a doji, I'll book profits. And then after a doji, or the other way to put it is, I'll wait for a doji formations to come. After a bunch of dojis getting formed, if it's a flat bottom, I'll go long. If it's a flat top, I'll go short, and I'll again book profits whenever I see a doji again. Okay, so basically what I'm trying to say is, if there is a doji, it means that markets are taking a pause and taking time to find direction, and then when it's taking a new direction by exhibiting a flat bottom or flat top, you will just go along with the trend. Okay, So let me show you an example here. You can see on the left here there's a doji here, a positive doji candle here, and after a positive doji candle there's a flat bottom, which means that the buyers are kicking the sellers out. So on this day, by end of the day, I would go long or buy a call option, and then the next day is a flat bottom and then a flat bottom again, and then on the third day it's a doji and a big movement has happened wherein sellers took it down and then buyers also brought it back up. So on this day I'll be booking profits. On the next day candle, you can see there's a tiny bit stick at the bottom, so it's not a flat bottom, it's actually a doji. So I'll not do any fresh entries here. On the next day here I'll go short, okay, because it's a flat, after a doji it's a flat top. And then on the next day itself I'll book a minimal loss because I can see a stick at the top, it's not a flat top. So I'll be booking a loss here, small loss. And in this point the profits that you make here is more than the loss that you book here. And then this again is a doji with a small tiny bit stick at the bottom, and then I'll go long here and then I'll book profits here because it's a doji. And then on this day I'll just go long, and then it's a flat bottom here and the flat bottom here and then a doji here. So I'll be booking profits on the long that I took here, correct? And then this is a doji, 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 and then a flat top negative. Okay. On the end of the day I'll go for a short or buy a put option, and then a flat top, flat top, flat top, and then a stick at the top and a positive candle. So I'll be booking profits here. Okay, so this is a very good profitable trade here. And then a stick at the bottom is a minor stick here, so I would not do anything on that day. And then you can see that there's no sticks at the bottom, it's a flat bottom positive candle, so I'll go long here. And then you can see a small stick at the bottom here. So on this day, by end of the day, I'll be booking profits. So this also would be a profitable trade. And then a flat bottom candle here, and then a doji. So if you did enter a long this day, the next day you would look to, by end of the day you would look to exit with minimal loss. And then a doji, and then a doji, and then a flat top negative. End of the day you go short, and then the next day here when it is crossing this level, it will definitely show a stick or early in the morning, so you book profits then. So pretty decent trade there. And then doji, 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 and then a flat top negative. So on this day you go short, and then stay short, stay short, stay short, stay short here. And on this day when you see a stick at the top, you book profits. And this is today's candle, it's still drawing, and it's just 1:30 p.m. So I'll still wait for end of the day, and if Bank Nifty holds and holds up at the end of the day, I'll look to take a call option. Okay, so it depends on how it closes, and if it closes well, then I'll go for a call option here. So this has to go up, and we'll see what happens in the next few days or next week. And this is Bank Nifty that's done, I'm sure. And this is Nifty again, so let me make sure it is Heikin Ashi. Yes, it is. So if you can see here, this is a doji and then a flat top bottom, flat bottom positive candle. So I go long here, I'll book profits here. And then a doji, flat top negative, you go short, book profits here. And then a doji, and then a flat bottom, you go long here, hold, 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 and then you book profits here. And then 3-4 days of dojis, and then a flat top negative. So here I would be going short at the end of the day and closing the trade here at no loss or no gain or minimal thing, minimal profits. And at the end of the day again here I would go for a long because it's a flat bottom positive candle, and then I'll book profits by end of the day here, somewhere here. And then a flat bottom again, so going long again, and then I'll book profits again. These are all marginal profits. And then a doji, a big doji, and then a flat top negative. So going short here, I'll be covering on this day early in the day as soon as it forms a stick at the top. So, and again a bunch of dojis, and then I'll short here, and it's a flat top negative, and again I'll cover the short here to book profits. And again Nifty today, even though through the day it has been falling, as long as it holds 7950, it will be a flat bottom positive candle, so we can still look to add a long at the end of the day if Nifty holds 7950, and we'll see how Nifty pans out in the next 2 days. And you can avoid a few noises by looking at both Nifty and Bank Nifty trend, meaning if both Nifty and Bank Nifty are showing positive signs after a doji, you go long. If both Nifty and Bank Nifty are showing a flat top negative after a bunch of dojis, you go short, and either on Nifty or Bank Nifty or both. So that's up to you, whichever you're feeling comfortable with. And wherever you see a doji, or after a bunch of dojis, if there is a particular directional move, you can enter into a fresh hedge as well. If you're playing with just one or two lots, you can go one directional play. And if you are doing with huge amounts of money, then you want to hedge, you want to buy both the call and the put, and then exit accordingly when you see a doji. So any queries, any questions at this point? Again, for those who feel that the video is confusing, watch my earlier videos on basics of Heikin Ashi, and as usual, post your comments and queries on this video and I'll get back to you. That's it for now. Thank you. Bye bye.